So let's kick things off for today. Now, we've had an interesting start to the week. Dollar slipped below 99 this morning. The yen is holding firm around 158. Bitcoin is back on the back foot. And US futures are opening with enthusiasm of, well, someone walking into the gym on leg day. In other words, none whatsoever after yesterday's public holiday. So here's the question for all of you. Is this a normal risk reset or the early stages of a bigger confidence wobble in US assets? Because when markets start pricing tariffs and geopolitics together, things can get choppy and fast. And nobody wants surprise turbulence on a Tuesday. So with that being said, for those of you who don't know me, good morning. My name is Francois. I'm your market analyst here at ATFX Africa. And today we'll be covering some currencies, some cryptocurrencies, and some indices. And again, anything that you request from me during the session. We're going to kick things off with some fundamentals, move over to some technicals, and add just enough humor to keep this from feeling like you're watching your portfolio update in slow motion. So let's kick things off today with the macro backdrop of what is going on within the markets at the moment. So as I stated, the dollar index has fallen below 99 this morning, extending losses from the previous session. The main driver with that is the escalating tension between Washington and Europe over the US president's proposal to purchase Greenland. Imagine purchasing a country. Like, you all here trying to find a budget to purchase a house. Meanwhile, we've got some people out there purchasing countries. So here's the timeline of what markets are reacting to. So the US president warned that 8 European countries opposing the plan could face tariffs. So 10% tariffs from the 1st of February, which would rise to 25% by June 1st, unless a deal for Greenland has been reached. That's the TNC here. And it's literally like, this is what I want. And if I don't get it by this date, 25% tariffs. European leaders have obviously condemned this approach as unacceptable and are weighing some retaliation options. And this is where things get serious. So there has been a lot of caution that Europe holds around $10 trillion in US bonds and equities, including significant public sector holdings, which could become leverage if the trade dispute intensifies. Now, investors are also looking forward to some key US data that is due this week. So we have the PCE price index that is on the cards. We have another estimate of the Q3 GDP that's going to be released. We've got some PMIs that are coming out. We've got the University of Michigan Consumer Sentiment Report that's coming out. And all of this is adding to the picture. So the macro setup at this point in stage is a mix of headline risk now and data risk later. So, and that makes markets that are essentially asking, is this noise or is this the start of a new macro theme? And I would love your input on this. So please weigh in on this. Pop me something through in the question and answer section. Pop me something through in the chat section. I'm actually seeing I've got a message here already from Obakeng asking, can we do analysis on gold? Brother, of course. It seems like prices are rising to 5,000. I actually got a nice little buy this morning on gold because, yes, gold is rallying right now. And obviously as well, when I have to be very clear about this, when I'm saying buy on gold, I mean buy on the 5-minute time frame. I'm scalping that thing the best I can right now. Then from Robert, good morning. Euro USD doing good. Gold and silver doing very well. Yes. So obviously, I'm not going to touch on silver today. I did a full analysis breakdown on silver yesterday. You are welcome to just watch yesterday's video. It is on the YouTube channel. And there's a full breakdown of my analysis on silver at the moment, but I'm happy to touch on gold. I'll also have a look at Euro USD. I'll do Euro USD just after USD JPY. So we're going to look at USD JPY first. Then I'll do Euro USD, and then we'll do gold and Bitcoin and so forth from there on forward. Also adding natural gas and Ethereum looking to be at a turning point. Okay, cool. So when we do Bitcoin as well, I'll add natural gas and Ethereum in there as well. Okay. So, wow. But I'm not going to mark those answers as red. I'm just going to leave them open so that I don't forget. But yeah, based on those requests, we are going to have an absolutely fun session. Okay. So I think let's kick things off then with USD JPY. So let's start there and then work our way through going through the rest of the session. So when we look at the yen, the Japanese yen steadied around 158 per dollar this morning, now trading just actually below that level. And this is after heightened volatility in the previous session. Now, drivers on the yen side at the moment is political uncertainty. The Prime Minister of Japan will dissolve Parliament on Friday and call for a snap general election on February 8th. Now, it contests all 465 seats and marks her first electoral test since taking office. Now, markets are also focused on the Bank of Japan's meeting, which is taking place this week. Rates are widely expected to remain unchanged after the December hike, but as traders, we are still watching for hawkish signals amid speculation of a possible rate increase in June. And then we have the ongoing tailwind, safe haven demand, which is supporting the yen, or supposed to right now, with trade tension and geopolitical uncertainty still in the background. Plus, traders remain alert for the possible yen intervention by Japanese authorities due to weak currency inflation concerns. So the yen has a very multi-factor story today. Politics, central bank expectations, safe haven flows, and all competing for control. So when we have a look at the charts at the moment, here we go. Obviously, at the moment, we are trading on that key support level is that range from 157.6 to around 158. And again, just going to zoom out here for you guys a little bit so that you can see the larger picture. So still trading within this ascending channel, and you can see the bottom of this channel has been a very, very strong support level. And now we've got this support level plus the trend line support from that channel, which is this level where we're at. So this is a relatively strong level right now. That is keeping the dollar supported. Let me put it that way. It's keeping the dollar supported for now. Now, the key resistance at the moment would be here at this high point for the year, which is around 159.5. Just rounding that one off to a nice clean round number. 159.5 is definitely where we are sitting at the moment with regards to our resistance levels. I don't know why my chair doesn't want to stay up today. There we go. Okay. Now, momentum at the moment is a little bit on the weekend at this point in stage. So if we look at the stochastics, we are just under that 50 level after bouncing from that oversold level. So here we expected probably a bit of a higher bounce to potentially go and retest that higher resistance. But it seems like markets are having a bit of a different opinion this morning after the public holiday. Now, looking at this on a lower time frame, you can see now, yes, in the last hour or so, we've definitely had some massive movements here, but there is still the potential for a move higher or lower from this specific point at this stage. So let's start with the bearish setup. If we get a break below this 157.4 level, that could potentially lead to a massive decline, potentially all the way back to this lower level that is sitting here around 156 to 156.1. Now, a nice clean bounce from where we are now. Again, we are going to have to see some major moves, because here you can see we already had the change of character on the 30-minute time frame from a price action point of view. So we've had the change of character. So a nice big break here would be the break of structure with the retest, which will set us up for a beautiful short position. For that change of character to the upside to be confirmed, we would need to clear and close above, I would say, this 158.5 level. And again, long positions on this currency pair at the moment is a little tricky. I would literally not put them too long term. I would keep them nice and compact, just because the fact that you don't want this to just for a Bank of Japan intervention to come and you getting stuck on the wrong side of this trade. So yeah, if it does bounce here, we can definitely get some retest of this higher level, maybe even that mid trend line here around a 160.5 if it goes and makes a new higher high. But if we break below this 157.4, there's definitely some nice short positions that could start exposing themselves from there on forward. So in essence, I would say that, USD JPY is acting like it wants direction, but it's waiting for the Bank of Japan to blink. Okay. It needs some setup before we can go from that point on forward. If you have any questions for me on this analysis, please feel free to ask. There was a request for Euro USD. So Euro USD, again, very nice setup. We spoke about this last week. I also shared my analysis during yesterday's market brief. So if you watched my market brief yesterday, you would have seen this setup for this buy was in that brief there. Because of the fact I discussed the event of a potential break of this descending channel, and then for a potential retest of this higher level here at around 1.18. Now, we are sitting at a very awkward level at the moment, because here we had the change of character, a little bit of a retest, and then that big buy that came in around 9:30 this morning. Now, from here, for me, the move is gone. Okay, so if you were planning on capitalizing on a buy, all means, if your analysis allow for it, I do know there was obviously people commenting on that, but for me, I've kind of seen this move past. I've entered some long positions, but my long position that I entered was down here at the break of the channel, which was around this 1.65 when I started layering some entries after we got that nice clean break with nice bullish intent. So that Maribozo candlestick that we saw there, that was kind of my price action breakout that I took from there on forward. So obviously a Maribozo candlestick being an extremely bullish indicator. From here on forward, like I said, for me, we are relatively overextended right now. And the general move for me has passed. Now, if we obviously get a bit of a retest and price action allows, we can allow for something in that regard, or maybe even a push to resistance, and then see if there is some retracement from there on forward. But personal opinion, I feel that this move has kind of, if we look at a day trading perspective, has passed. Now, again, I'm open to commentary on this. So if you want to weigh in on this, I'm happy to listen, and let's debate that. Let's talk about it, and I'm happy to go from there on forward. Okay, brilliant. So yeah, let me know what you guys think. Again, I actually got a comment here. I agree with your analysis on USD JPY and Euro USD. Appreciate it. And that obviously comes from the person who asked for the analysis on Euro USD itself. Okay, so appreciate that, Robert. Perfect. Okay, cool. Let's move on to our next section. So during this, I'm going to look at a range of cryptos and commodities. So we're going to be discussing Bitcoin. We'll look at Ethereum, and we'll obviously look at gold as well, because of the fact that that was a primary request as well from Oba King. Now, as I stated in the beginning, Bitcoin's a bit on the back foot at the moment. Okay, it's trading around 90,950. So just below that actual 91,000 level. It has actually taken a bit of a nosedive as well within the last few hours, going closer to that 90,800 level. This obviously means we are down on the session at the moment. And I think the broader tone with this specific crypto is remaining cautious, and I'm going to justify why I'm saying this. Now, the macro connection in our data is relatively clear. I mean, tariffs and geopolitical tension doesn't directly change crypto fundamentals, but it hits risk appetite. And when risk appetite drops, speculation assets often feel it first. So, some key data points for us to have a look at regarding Bitcoin at the moment and the general crypto market. So crypto markets saw an $869 million in liquidations in the last 24 hours, with a very large position in long positions, and about $229 million of Bitcoin bets got wiped out completely. Okay. That's a strong signal of positioning getting squeezed, not just slow drifting. Okay. So when we do look at the charts on this one, and I'm going to start on a relatively high time frame here. So yes, I am on the daily. And on the daily, you can see that we are in this rising wedge pattern. Now, those of you who've attended my masterclass on chart patterns, you would know that a rising wedge pattern is a bearish chart pattern. And again, if we're just looking at the rules of chart patterns, that gives us a potential if this breaks. So again, the chart pattern trade isn't valid yet because the pattern hasn't broken yet. We're still trading within it. But if this pattern breaks, $80,000 is becoming an option again. So a short position down to 80,000 is definitely an option at that specific point again. So, I mean, from the higher range of this channel here at around $97,000, that has even 97,500 almost, that has been a relatively strong resistance. Yes, we are approaching relatively strong support now around that 90,000 to 90,500. But like I said, if this breaks, that key 80,000 region is becoming our major support marker. If this area here from 80,000 to around 75,000 breaks, or market actually moves through that can be a major shift in sentiment. As you can see, yes, we obviously had this move down here from those all-time highs. We've had some consolidation, but again, the consolidation has been in a bearish formation. So this could be an indication that the larger bearish move on Bitcoin has not completed yet. Now, if we do look at some lower time frames, and again, please be vigilant when scalping a crypto like Bitcoin, even day trading. So again, you can see that larger support level is sitting around this general area here, which is closer to the 90,000 level. That 90,000 to, yeah, let's just call it 90,000. So in essence, price action could push lower down to this 90,000 level. If some proper support is found, we could see a potential move back up to retest this area here from 93,500, potentially even up to about 94,000. Again, trading within this rising wedge pattern. So that's kind of where I would day trade it at the moment, is, bottom of the pattern to top of the pattern, bottom of the pattern to top of the pattern, until the pattern breaks. If the pattern breaks, obviously, that's a much larger shift within market sentiment from a price action point of view. And again, I would love your input on this, so please feel free to pop me a message and let's discuss this. Now, when we are discussing Ethereum, there is obviously similar setups. Now, obviously, last week we discussed this long position within this rising channels. That was the move that we discussed last week, which was that rising channel. This was last week Tuesday. We got a nice little test here at the bottom, nice clean break, and the market just launched from there on forward, all the way to the top of the channel. And again, whenever you're trading within a chart pattern like that, that's kind of your day trading range. So within that day trading range here, you could have traded very nicely. Bottom of channel, top of channel, bottom of channel, top of channel, bottom of channel, top of channel, bottom of channel. And what happened at the bottom of the channel? At the bottom of this channel, we saw a break. Now, what are we waiting for again? Now, again, here on Ethereum, we've got that precursor almost of what's happening on Bitcoin at the moment. So Bitcoin is still trading within its pattern, but Ethereum already broke. So Ethereum could actually come back for a retest around this, let's call it 3,150 level. And then that could actually lead to a larger sell-off, potentially back down to this 2,900 level, or even lower to this range here between 2,700 to 2,800. So that is definitely a potential right now. Um, or what we could see is it actually might break below this support where it is now here at 3,080. And you could actually see a break with the retest and then the larger move if it doesn't go back up to retest the channel. Okay. That's my general thoughts currently on Ethereum. Obviously, like we said, there's large amount of liquidations that's been taking place within the crypto space and a few other things that is going on at the moment, which isn't great for risk appetite. And it's definitely affecting both Bitcoin and Ethereum negatively. Okay, I haven't gotten any additional comments on that. Now, the one asset that hasn't been affected negatively by the lack of risk appetite right now is gold. Okay. This thing is on a mission at the moment, trading at a new all-time high and just, actually, that's not the all-time high anymore. That's now the all-time high there. So I'm just going to delete this. But just literally keeping making higher highs, higher highs, higher highs, higher highs. Now, the only way to, okay, for me, okay, let me rephrase. I'm just going to say the only way. For me, the only way to trade this right now is lower time price action. So here you can see we had that change of character, larger break of structure, and this is kind of what I capitalized on this morning. So when we had this break of structure here, it was around 7. I got my entry around there, just had a nice little tight stop loss. Stop loss wasn't even, like I said, I had a tight stop loss. It was around over here because if it came back, my break of structure was not valid, and literally just did like a 2-to-1 risk reward ratio. Now, again, all I'm gonna do now is just wait once more for this thing to dip lower, break structure, and just trade from there on forward. But jumping into a trade whilst in the rally is just high. It's a very high risk trade. Let me put it that way. And also shorting gold right now is also not the best idea. Now, just some things to discuss here. And again, not advice, but from my side, just words of caution. Okay. Volatility on gold at the moment is immense. And it's literally, like you can see, making higher highs, higher highs, higher highs the entire time. So if you are entering a trade, please ensure that's a high conviction trade. Okay. Meaning you are sure about what you are entering. Okay. And even with your high conviction trade, stop loss, people. Stop loss, please. Now, I know people are going to say, we don't trade with stop losses. If you're trading gold at the moment and you're not trading with a stop loss, it's a suicide mission. Okay. You are basically playing kamikaze pilot. So, because either you're going to win big or you're just going to crash out. Crashing out isn't the goal for us in trading. Okay. So, proper risk management, good stop losses, take profits, and you'll be able to capitalize on multiple moves. And like I said, you can even drop this down to like a 5-minute time frame. And because there's enough volatility at the moment. I mean, literally just this morning, we are up almost $40. Okay. So you could capitalize on a bunch of small moves, taking $10 moves, $10 moves, $10 moves. Because even within that, on the lower price structure, there are higher highs, higher lows, higher highs, higher lows. So every time it makes a higher low, you can get in, buy up. Um, Not really all that keen on shorting, but if you want to, you can trade it both ways. But again, if you do, stop loss in place so that if you are wrong, it taps you out and you get another chance. Okay. I wouldn't just go enter a position and leave it running at this point in stage. Again, just my 2 cents on that because of the fact that from experience, that's just all I'm adding to gold at the moment. Obakeng, I do hope the analysis that I shared assisted and made sense. I would love some feedback from everyone, and then we'll move on from there onwards. Okay. Robert says, thank you. My Ethereum analysis lines up with yours. Okay, fantastic. There was one more that you guys wanted me to look at before I move over to equities, which is natural gas. So let's just do this. Again, this one is also on a very, very nice level at the moment. So let me show you. So here's my natural gas chart. We obviously had a nice bounce. Go to a lower time frame. So we had this very, very big bounce with the open on Monday, where there was that gap from this $3.25 to where we opened at around $3.60. We have now bounced higher and trading close to the top of the channel. Okay. Now, again, there are a few options available for us at this specific point in stage. Again, I'm going to drop down to a nice lower time frame. We have been moving higher, and again, this is a nice little higher high. So there is a potential. Now we can see here a bit of consolidation, right? There's that consolidation block. So if that consolidation block breaks at $3.80, we could potentially short-term day trade come back for a retest here at $3.60. If that breaks, we could aim for the bottom of the channel. If that doesn't break, and it moves back up higher and then breaks out of the channel, again, if the channel gets broken, there are some larger moves that are in play at that specific point. If the channel gets broken, there's a very nice possibility for a retest up here at $4.50. But again, only if price action permits and we get a break out of this actual channel. Other than that, there are quite a nice few day trading opportunities. If we, like I said, from this consolidation block, if we break lower, similar to what we had here, we had that move higher, consolidation block, broke lower, sold down to support. Consolidation block, broke higher, bought up to resistance. So again, now consolidation block again. And again, very similar to kind of what we discussed last week, Wednesday, with the Wyckoff strategy, with those cycles of market movement. So again, from here, there's most probably a mark down that's going to come first, forming a new higher low, or lower high, sorry. And then again, some consolidation, and then the mark up from there on forward. I hope that makes sense. Please pop me a message on that, and I will be happy to discuss if there's any additional comments that you guys have on that as well. Okay. Obakeng says your analysis really helped. Thank you. Absolutely brilliant. Love it. Thank you so very much. So let's finish for today. Okay. With the Dow Jones Industrial Average, also known as US 30. And there's actually a really nice setup pending on this one. So you want to stick around for this. So let's discuss general market structure first. So US stock fell as Wall Street reopened after the public holiday. So obviously yesterday was Martin Luther King Jr. Day. US had a little bit of a long weekend. And again, stocks are pressured by the same Greenland tariff tensions. So with regards to the 10% that's being implemented from the 1st of Feb, or potentially the 25 from the 1st of June if no agreements have come to fruition, and potential Europe retaliation that's also in the mix. Okay. Now, to add on top of this, markets are also staring down a packed week of additional catalysts. Now, yes, we've got Q4 earnings season that continues from here on, with results due from major companies which include Netflix, Charles Schwab, Johnson & Johnson, Intel, Visa. These are all up on the cards during this week. So we've got that set up at the moment with geopolitical headlines on the one side, earning risks on the other side, long weekend, market reopening, and all this is trying to find some form of footing. Now, markets are pushing down aggressively at the moment. Let's not understate that in any way. And if we have a look at the charts right now, you can see we are trading at the lower end of that ascending channel, and also touching that 200 period moving average. So the 200 period moving average is this red one, which is on the 4-hour time frame, plus stochastics on the 4-hour close to oversold, or literally in oversold, just waiting for a bit of a bounce. Now, if we look at some lower time frames, that opens up some opportunities. Okay, if we get a bounce back in and we get a bit of a change of character, and I would go very low on this, like 15-minute time frame, to get a change of character here, break of structure, and then we could potentially get a buy back up to around 49,000. However, if we get a little bit of a retest and a break of structure here at 48,500, that opens up the floodgates for a potential sell all the way back down to around 48,000 flat, okay, which is the low point from the beginning of the year. So again, all you're saying is just a little bit of a retest, break of structure, open floodgates all the way down to this bottom. And again, if prices get liquidated at this support level here, pushes potentially lower to come and retest beginning of December lows. So, but again, it all has to align from a price action perspective. So I would drop down to around a 15-minute time frame and just monitor price action from here. So we've already seen the larger move this morning. So we had this very nice break of structure after a massive amount of consolidation. We had a nice clean break of structure and a push all the way to the bottom of the channel. Now we are at the bottom of the channel. Now, if we do get a little bit of bounce higher, change of character, we could come back up to retest, as I said, or you could push a little bit lower, retest, and then a massive push lower from there on forward. So at this point in stage, this is less about one technical trigger and more about broad sentiment. If trade uncertainty continues to build, traders may keep a tight leash on risk until earnings and data provide more clarity. Please keep that in mind. I just want to see here if there was any additional questions that came through. No, doesn't look like it. Cool. So traders, with that, I would say going into today's trading session, keep an eye on the following two things. First things first, does the Greenland tariff narrative escalate? And does Europe's $10 trillion in US holding become more than just a talking point? That's number one. Then, as the week progresses, does the PCE price index, PMIs, GDP, and consumer sentiment reshape markets' view of the US economy amid all the political noise? Okay. Because right now, as I stated, markets are trading on one simple principle. When confidence in the asset is being priced in, everything else kind of moves with that in that direction. Now, we have been going for about 40 minutes. If there's no additional questions, I'm going to wrap things up here. And I want to thank each and every one of you for joining the session. And with that, we wrap up your daily market brief brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Now, if you want to go and experience the difference for yourself, simply click on the link in the description. So, traders, until next time, stay sharp, stay focused, and trade smart.